Right, the audio should be coming through. I do apologize. I had some technical issues on the previous show, and this is the consequence. So we could see massive red candle. We were literally off the charts. We had a beat on revenue, but miss on earnings per share. What is today's topic, or what were today's expectations? Revenue 211 billion. We had a beat, which is 12 to 13 year-over-year growth expected. Earnings per share $1.97 to $1.98 was the consensus and the expectations. We had a miss, $1.95. Amazon Web Service, we were expecting 35 billion income, which would be 21% year-over-year growth, just about. Margins, we are expecting slight improvement, and free cash flow still pressured by the AI spending. Big topic, big theme of this earnings. Bottom line, strong quarter is expected, but not a blowout. And you can see, not a blowout, definitely. It is more of a blowdown. Thank you everyone for letting me know. I can see the messages. Mike, hopefully the audio is now coming through. I can see myself on the monitor. Everything should be okay now. Let me know in the chat if you can hear me, if I'm coming through. Please do let me know if I'm coming through. So, previous quarter, what delivered third quarter 2025? Expectations were 178 billion, and I covered the third quarter with you. So I remember a lot of it. Expectations, am I coming through now? Please do let me know in the chat if you can hear me. I've had some technical issues on the previous show. Basically, my whole studio has crashed because of power surge or power cut, and I tried to recover it, but I couldn't. Okay, I think I'm coming through. Thank you very much. So the expectation on the previous quarter, 178 billion, and we had a beat. We had a good beat, 180.2 billion. Earnings per share expectation $1.56 on the third quarter, the previous quarter, and we had massive beat. Last year, $1.95 earnings per share. Amazon Web Service, AWS, expected revenue on the previous quarter was 32.4 billion, and we had a beat on that as well, 33 billion. And operating income, 17.4 billion. And we have a special message.
At FinK tipped €10 through Super Chat. The most honest channel I have ever seen. Martyn, you are a good person. But good people are always attacked. Keep the faith and be our captain in these difficult times.
That is from the other show. That was message to Martyn, but thank you very much. If you are watching, if you'll be watching later, thank you very much for the message. So, results on the previous quarter, clear beat across revenue, earnings, and cloud. Third quarter, results and fundamentals, and we should go through this because we will follow on to this. We will carry on, we will carry this story through the fourth quarter. Positives. Thank you, Yestin, by the way, for letting me know about the mic issues. I think can hear you. Yeah, thank you very much. And thank you, Yestin. Great job. So, Amazon Web Services, or Amazon Web Service growth back above 20% in the previous quarter. And we will lead on to this for this quarter. Strong AI demand as well on the previous quarter, better logistics efficiency, advertising growth, and profit surprise. That was third quarter positives. Third quarter negatives, some one-off gains, weak cash flow, and rising infrastructure cost. Third quarter takeaway, good execution and rising investment pressure. There is a recent story that came out yesterday. Amazon announced a recent AWS, Amazon Web Services partnership. Ahead of earnings, AWS signed a multi-year cloud and AI deal with Prosus, reportedly worth hundreds of billions of dollars. It consolidates AI workloads and AWS and adds long-term contracted revenue, but won't materially boost fourth quarter numbers. So Amazon have locked in income for long term. This will not be affecting this candle in here. Another story for this quarter, and this is significant for Amazon: workforce reductions. Thank you very much everyone for joining me. I can see the audience from the main event has just arrived. Don't forget to hit the like button. Thank you for joining me. If you are new to this sector, subscribe, because we are covering all Amazon earnings. We had a miss. We had a massive overreaction. We had massive red candle. Now we are recovering from the overreaction. We are going through the story one step at a time. We recapped third quarter. What were the expectations? What were the results? Now we are slowly leading into the fourth quarter expectations and the main stories, one of which is workforce reduction. Amazon has also restructured its workforce. In late 2025 and early 2026, it cut around 30,000 corporate roles, about 10% of its corporate staff. The most recent one, about 16,000 people laid off in January. This supports lower costs, better margins, and stronger discipline. So this might be sad for the employees and their families, because people were losing jobs, but this is good for Amazon as a company, containment of their expenditures, and good for us as their investor. But also reflects a tougher operating environment. So there was a lot of pressure to go through this. This quarter expectations, another chapter of today's story. Retail. What can we expect from the retail sector? Strong holiday demand, and Prime, Amazon Prime, still remains the key product, the key structure of retail. Amazon Web Service and AI. We can expect continued cloud momentum. Some capacity limits, obviously. By the way, you've just joined. We are waiting for the earnings call. It will be starting in about 45 minutes. Amazon, they usually start a minute or two late, but they are usually on time. We are about 45 minutes from the actual earnings call. We will now finish this story, and I will move back into the main studio, and then we can talk. Let me know in the chat if you are disappointed, if you are surprised, if you are not surprised. Let me know in the chat. I will come back to you, and we will see the slides, and we will dive deeper into the numbers. Now we are unveiling the story and the expectations for today's day. Advertising. In advertising, we can expect seasonal boost and high margin contribution. In terms of margins and cash flow, slight margin improvement, and CAPEX is still elevated. And that was very heavily watched on the previous earnings, the CAPEX expenditures. And investors really want to see some firm guidance, or at least some indication. Are Amazon going to spend much more money on the CAPEX, or are they finally going to give us some more indication or route? So the summary of expectations for this quarter: operationally strong, financially controlled. We will find out very shortly if we have met these expectations. Main themes for this quarter, and I've already touched it. Bear with me, don't go anywhere. This is important for the earnings call. Amazon Web Service and AI monetization. Can Amazon grow AI without hurting margins? Very, very interesting. So it's one of the themes that will be very closely watched. Another one, as already mentioned, CAPEX versus cash flow. When does spending start paying off? Another theme for today, retail efficiency. Can fulfillment stay profitable? Theme number 4, advertising growth. Still a key profit driver. And obviously 2026 outlook, because we have just opened the new year. Any hints on growth and margins matter. We are seeing slight recovery. The overreaction cooled off, but we are not coming back to the previous levels. So bear with me. Just have closing line for you. Third quarter proved Amazon can still deliver strong growth. Fourth quarter is about sustaining that momentum while controlling costs. This call is about execution, discipline, and long-term dominance. Thank you very much for bearing with me. Hope you have learned enough for the actual earnings call. Let's get back to the main studio and see the numbers and go through the investors' slides. There we are, back again in the main studio. Let me just change the camera, and there we go. So let's check on Amazon's investor relations. If we have the presentation out already, let's just check on this. I am monitoring the chat. I see I'm getting a lot of messages. Thank you very much. Let me know if the audio is okay. We have a special message from our special guest.
Robert Elliott tipped $2 through Super Chat.
Thank you very much. Right, the presentation. I don't think we have a presentation out yet. Let's see. Okay, we've got earnings release. Okay, so we have very boring letter. I know, I remember Amazon, they have presentation. They have presentation on their actual call, but we have this fairly boring letter visually, but the numbers will not be boring. So let's have a look at this, what we've got here. Again, those who just joined, I can see more people coming in. Don't go anywhere. Don't go anywhere. Let me just mute this. Let me just mute this. Don't go anywhere. We are about 40 minutes away from the actual call. So we will go through the numbers. We will see why we had such a reaction on the stock chart and unveil the whole story. So Amazon announces fourth quarter results. Can I zoom in? Yes, I can zoom in. February the 5th, 2026, Amazon.com Incorporated today announced financial results for its fourth quarter ended December 31st, 2025. Okay, we are having... All right, yeah, I'm getting messages from Martyn. Technical issues, more technical, minor discrepancies. Thank you, Martyn, for the heads up. Fourth quarter 2025, net sales increased 14% to 213.4 billion in the fourth quarter, compared with 187.8 billion in fourth quarter 2024. So we have a good growth, excluding the 2.8 billion favorable impact from year-over-year changes in foreign exchange rates through the quarter. Net sales increased 12% compared with fourth quarter 2024. Let me just bring up the chart so we can monitor it live on the screen. Bear with me. I had to restart, unfortunately, my PC before I started the afternoon show, so I have to bring everything back up again. Amazon, let me just bring up the right chart. Amazon, there we are. So we will be watching the chart here. Let me just, where was it? That one. Right, we'll be watching the chart here. Can I switch it to dark? Why do I switch it to dark? Okay, let's get through this story and I will switch it to dark theme later. So let me just switch to 5-minute candle as we have it on the screen. In the analyst room, there we are, $204.30. We are sitting on a slight recovery, but we had a massive reaction, massive red candle, down 4.42% on the news, on the numbers coming out. North America segment. North American segment sales increased 10% year over year to 127.1 billion. Just 1 second. I'm getting messages from the team. The director is calling me. Bear with me. I don't think it's okay. I don't think it's directed at me. That's fine. So international segment sales increased 17% year over year to 0.7 billion, or increased 11% excluding changes in foreign exchange rates. Amazon Web Service segment sales increased 24% year over year to 35.6 billion. So we beat the expectations. The expectations were 33 billion, as we've been through the numbers before early on the show. So we beat with Amazon Web Services. Operating income increased to 25 billion in the fourth quarter, compared with 21.2 billion in fourth quarter 2024. Fourth quarter 2025 operating income includes 3 special charges: 1.1 billion for the resolution of tax disputes associated with our stores business in Italy and the settlement of lawsuit, 730 million in estimated severance costs, and 610 million in assets impairments primarily related to physical stores. Without these charges, operating income would have been 27.4 billion. So we have great growth. What is the stock doing now? Sitting at $205, bouncing slightly up and down. We have just hundreds and tenths of percent points. No massive move. I think we will see main move on the actual call. What else we've got here? So we've been through the operating income. Net income increased to 21.2 billion in the fourth quarter, or $1.95 per diluted share, compared with 20 billion or 1.86 per diluted share in fourth quarter 2024. So again, we have a good growth. Full year 25 net sales increased 12% to 716.9 billion in 2025, compared with 638 billion in 2024. Excluding the 4.44 billion favorable impact from year-over-year changes in foreign exchange rates through the year, net sales increased 12% compared with 2024. North American segment sales increased 10% year-over-year to 426.3 billion. International segment sales increased 13% year-over-year to 116.9 billion. Or increased 10% excluding changes in foreign exchange rates. And as already mentioned, Amazon Web Service segment sales increased 20% year over year to 128.7 billion. Let me know in the chat if you have Amazon Prime and if you use Amazon as a shopping platform, because I'm very intrigued. How many people, how many Amazon customers do we have here, and who are paying for Amazon Prime? Operating income increased. Actually, let me do a poll. Let me close this poll. Amazon beat or miss? We were expecting a big beat. Beat by a mile, 22%. Beat, excuse me, 33%. Miss 28%. And undecided 18%. So let me start a new poll. Are you using Amazon Prime? Option 1 for shopping. Option 2 for videos, for video content. Option 3, both shopping and video. And option 4, no. I think it's fairly straightforward. Do let me know. Do let me know in that poll. I'm very intrigued. How many Amazon customers do we have here? Where is the stock sitting now? We are sitting at 200. We just tipped over $206. We are seeing a slight recovery, ever so slight recovery. after the initial overreaction. So let's see what the actual earnings call is going to bring us. We are 34-ish minutes away, 35 minutes away from the actual earnings call. I've got it already. I am monitoring it. Everything is on standby. So bear with me. We are about 33 minutes away. We will have a presentation as well. I know Amazon, they have visuals and they have fairly interesting charts as well. So don't go anywhere. You will find out why did we have this reaction and are we going to have a recovery. So operating income increased to 80 billion in 2025 compared with 68.6 billion in 2024. North America segment operating income was 29.6 billion compared with operating income 25 billion in 2024. International segment 4.7 billion compared with previous year 3.8 billion. And Amazon Web Service segment operating income 45.6 billion compared with 39.8 in the previous year. Net income increased 77 to 77.7 billion or 7.17 per diluted share compared with the previous year 59.2 billion or 5.53 per diluted share. So we have very good growth. Operating cash flow increased 20% to 139.5 billion in the trailing 12 months compared with 115.9 billion for the previous period. Free cash flow decreased to 11.2 billion for the trailing 12 months, driven primarily by a year-over-year increase of 50.7 billion in purchases of property and equipment, CAPEX, we talked about it early on the show, net of proceeds from sales and incentives. This increase primarily reflects investment in artificial intelligence. This compares to free cash flow of 38.2 billion for the trailing 12 months ended December 31st, 2024. Amazon Web Service growing 24%, our fastest growth in 13 quarters. That's very positive news. Advertising growing 22%. Stores growing briskly across North America and international. Our chips business growing triple-digit percentages year over year. Wow, this growth is happening because we are continuing to innovate at a rapid rate and identify and knock down customer problems, said Andy Jassy, President and CEO of Amazon. With such strong demand for our existing offerings and seminal opportunities like AI, chips, robotics, and low Earth orbit satellites, we expect to invest about $200 billion in capital expenditures across Amazon in 2026 and anticipate strong long-term return on invested capital. There is the CAPEX for you. $200 billion is a massive number. Is this going to pay off? What is going to be the percentage of distribution? Hopefully we will find out on the earnings call. I am seeing a lot of messages, so perhaps let's quickly, I'm not going to go through the whole investors letter. Let's just quickly skim through. Yes, we have Amazon. We have Amazon Prime, so we will quickly have a look at Amazon Prime. What else we've got? Financial guidance. This is interesting. Let's go quickly through the guidance and I will come back to you in the chat. In the meantime, Amazon sitting just below $206. No massive move up or down. So let's go quickly through the financial guidance for this year. The following forward-looking statements reflect Amazon's expectations as of February the 5th, 2026 and are subject to sustainable uncertainty. Our results are inherently unpredictable and may be materially affected by many factors. Okay, let's go through the caveat. First quarter 2026, or let's go over the caveat, not through. First quarter 2026 guidance. Net sales are expected to be between 173.5 billion and 178.5 billion, or to grow between 11 and 15% compared with first quarter 2025. This guidance anticipates a favorable impact and approximately 180 basis points from foreign exchange rates. Operating income is expected to be between 16.5 billion and 21.5 billion, compared with 18.4 billion in first quarter 2025. This guidance includes approximately 1 billion of higher year-over-year Amazon Leo cost as we scale in 2026, as well as investment in quick commerce and even sharper prices in our international stores businesses. This guidance assumes, amongst other things, that no additional business acquisitions, restructuring, or legal settlements are concluded. Okay, I think that was enough for the guidance. So let's have a look. We have the numbers here. We'll get through it shortly. Let's catch up with the chat. Amazon, $205.20. Let's have a look at the chat. Terry Rose was here first. Ganja. Don't forget about the poll. I can see the numbers coming through. We don't have enough votes. Please do cast your vote in that poll. I can see the numbers coming through, but we don't have enough votes. So I'm very interested. Do me the favor. I'm very interested. How many Amazon Prime members? And if you are using Amazon for shopping, just the video, or for both. Yes, Tin, thank you for your heads up about the mic. Again, tech issues from the previous show. I just recovered from it, as you can see. Liz is here. JJ 8-Ball. Yes, Tin. Yes. This way. Gaming is here. Nick Jones. Yes, everyone is here. Martyn sent me. Martyn is rubbish. I love it. Ken here. Yeah, that's great. Thank you, Nick. Joel Garcia is here. Smoke that ace. I love it. That's fantastic. We got all Martyn's audience. That's amazing. Dynamite Power. Kurt Savage. Everyone is here. Zach is here. Big miss. I'm not showing the chat. What is going on? Bear with me. Okay. Please stand by. I'm not showing the chat on the screen. There we go. As I told you, I had some technical issues on the previous show, and I'm still just recovering from it. Zach, big miss. Martyn sent me. Martyn is rubbish. I'm pretty sure that's not what Martyn said. Please like and subscribe. Yes, yes, yes. Thank you, Javi. Okay, we are getting a lot of positive reaction. That's great. That's what we do. We don't spread negativity. We are all positive. We all want to be successful, and we all want to grow together. Martyn is rubbish. He sent me here. Okay, so I guess that's what Martyn said. Maybe. I got a goat. I don't know if it's to me, but I love that emoji. That's nice. Okay, we have more and more people. Stu is here. Mark Freiher. If I'm misreading your names, I do apologize. The letters are so small and I can't zoom in on this chat pop-out window. I got a super chat from Robert Elliott. Thank you very much for that. $2. I do appreciate your support. Songs for Space. I bought Amazon Dip. For sure need a payday. Hallelujah. I know what Martyn has been through, because yesterday we had reverse positions. Martyn was setting up the show. I was on the call with him in the background whilst he was setting up the show, and I was able to buy the dip, and I made about 16-17 pounds. And he was so angry because he could have made a lot of money. Now there was a dip, and I couldn't buy it because I was with you in the analyst room. But it is what it is. It is what it is. You can't win them all, can you? Audio okay, right? Thank you very much. Hello, Vaz. Is Tim Rogers? Oh, Tim Rogers, I love to see you here. Thank you for joining me. Oh, wow, that's a huge miss. What do I have to join Discord? Okay, I'm pretty sure Martyn will address in the chat. Use VPN, Whisper. Okay, that's a conversation about Discord issues. Okay. I just paid an item for my wife. Okay, that's great. I am paying for Amazon Prime and it pays for itself. I agree. My first port of call always is Amazon Prime. If I can find a product on Amazon, I usually 9.5 times out of 10. Or shall I say 9 times out of 9, I go with Amazon Prime. And funny enough, the prices are fairly competitive. I remember the days like a couple of years ago or 3-4 years ago, Amazon was slightly overpriced or slightly higher prices compared to eBay and other retail. But now Amazon has very competitive prices as well. And what is the best? What I love is the Amazon Prime days. I'm always waiting for them and I'm buying up gear for the studio. Like lights, little small LED box light that costs me, I don't know, 26 quid. I can buy for like 18. And I mean, yes, it's only £8 saving, but I mean, if you have like 10 of them around the studio and in your mobile studio, that is where you are saving money. I'm quite disappointed that Amazon, I mean, they don't need it. Obviously, they don't need it, but Amazon don't have any loyalty program. I mean, in the UK, it's everywhere. Around Europe, it's also everywhere. You are collecting points, or you are getting cash back, or you are getting other perks. The more money you spend, the more perks you get. Weird that Amazon don't have this. And I think I would have been benefiting from that very well. Will this news make XRP rise in price? Well, let's have a look what the markets have been doing. It's a good point because we have been missing the market. So the S&P is down 2%. Nasdaq down 2.4% almost. Wow. Bitcoin sitting at $63,500. What a sale. Well, is it a sale? You tell me. XRP $1.16. Ethereum $1,000, 859, are now dipped up to 860. Gold 4,777, going slightly up, and silver sitting at $72 per ounce. How about that? How about this for a market? Amazon $204.29. We are about 20 minutes away from the earnings call. Let me just refresh this. If the room is open, the room is not open yet. So we are about 5 minutes away before they open the actual webcast. Let's catch up with the chat, then we can go through the numbers again. I also use it for my business. Yes, I agree, Javi. I use it for my business as well. And I know Martyn uses it for his business as well. Dave Rahman says, I use it all the time. Between Google and Amazon, 385 billion in AI spending. Absolutely insane, says Songs for Space. Yes, I agree. Unfathomable. I never knew how to pronounce this word. Am I saying that right? Unfathomable. Or maybe I'm not. Ashley Bowden, pay for Prime, shopping and videos. It's a must. Yes, I agree. You can't buy XRP from Amazon, Darren. I love it. Why does no one want to answer? What do you mean? Oh, you mean the poll? I don't know. Whisper as the question. What's the question? What was the question? Yeah, are you using Amazon Prime? That was the question, I think. Unless I've missed something. Finally can listen in peace. Not sure why I would need your address. I would not put my address in. Okay, you are probably talking about Discord. I don't know. How are the expectations? Well, we've been through it early in the show. I'm sure someone can help, but Okay, so we are talking about Discord. Okay. Question is, what are they really doing with these trillions of investor money, says Songs for Space. Trillions supposedly spent on AI. Well, we will find out on the actual call. We are about 18 minutes away from the actual call, so don't go anywhere. You don't want to miss the main event of the night. My daughter works for Amazon Fulfillment. Robots will be taking over in 10 years. Yes, I agree with that, Terry. I sent you a friend request. Okay, so unclear all the answers. What do you mean, Liz? What do you mean, Liz? What unclear all the answers? Are you talking to me or? Martin says Discord does not ask for your address. Correct. And also, we don't message you on Discord. We don't ask you to send us any of your personal details. We don't ask you to provide us with any of your personal details and data. So, any accounts asking you by Martin's, Sensei's, mine, or Casey's name are more than likely scam. If you are unsure, the easiest way you can do to check, come on a live show and speak to us, but we never message you unless we are friended with you. That's a nonsense. No, we will never message you first. Let me put it this way. It asks for your phone. It keeps saying my phone is invalid. Okay, well, that is a conversation about Discord. Let's have a look. 202.43 cents. Okay, very interesting. It looks like we might go even lower. Let me just check something. If we have any more data, if we have any more information, I can do this because my cameras are working now. Right, I cannot see any more. We don't have any slides. We don't have any. We just have this investor's letter. The numbers. Well, let's have a look at the balance sheet. How can I zoom in? Okay, that should be enough for the screen. So let's have a look at the balance sheet. We are about 15 minutes away. We are about 15 minutes away from the actual call. Stand by. Don't go anywhere. We will find all the guidance and we'll see where all the trillions of dollars are being spent. So cash equivalents and restricted cash beginning of the period is for 2024 we had 78 billion, 78.6 or 7 billion and 70.5 billion for this year. For 3 months ended December the 31st, and for previous year we had 73.9 billion and 82.3 billion for this year. Operating activities net income is up, as we can see, is massively up, 59. How about if I zoom in? Okay, I'll try this way. I don't like these letters because when you zoom in, it's the PDF and it's got the setting is there and you just can't change it. You can't squeeze it. So it's a bit rubbish to read it on the screen, but it is what it is. So that is the revenue. What else we've got? The income. Adjustment to reconcile net income to net cash from where do we have stock-based? Okay, depreciation and amortization of property and equipment. Then we have stock-based compensation. So depreciation is going up from 52 billion to 65 billion. What was this? Stock-based compensation. It's going down. That's fairly good news because it looks like it's being contained. I can see now I've got good news for you. Look, we've got these slides ready. Got the slides ready. Got music coming through. Let me just mute this so I can monitor the music. I cannot play the music for copyright reasons, but we are literally minutes away. We are 13 minutes away from the actual earnings call conference. What else? What else we've got here? What else we've got here? Non-operating expenses, deferred income taxes. Okay. I don't know how to show you the numbers better because if I zoom out, you cannot read it. I can't read it. Nobody can see it. But if I zoom in, it's so spread that I can't just give you the lines in on one screen. What else we've got? Invest in activities. That could be interesting because we have been asking, where is this money going? Where are these billions being spent? Purchases of property and equipment. So we are massively up. We have almost 50 billion increase year over year. As I said in the beginning of the show, CAPEX will be the main theme of today's earnings call. Proceeds from property and equipment sales and incentives. Not much. And we are actually lower. We are down from 5.3 billion to 3.5 billion. Acquisitions. Net of cash acquired, non-remarkable investments, and other in net. So we are down on this as well, and we are negative, actually. We are negative, so that's a good news. That's a good number. Sales and maturities of remarkable securities. That's up, which is good news. Significantly up. Purchases of remarkable securities. Did I see other earnings? I just got a notification on my phone. Let me just see if there's anything noteworthy. No. Got Reddit reporting. Let's have a... do you want me to continue with the numbers or do you want me to have a look at the other earnings? Let's have a look at the other earnings because the numbers, we're going to see it from the slides. We're going to hear it from the CEO. So today we are here, Thursday. Shell, miss this morning, big miss, big reaction to the stock as well. Amazon, we are here. MicroStrategy, can you see it? No, you can't see. Okay, you can see it on the screen now. Can you? You can't because I'm blocking the view. How are we going to do this? Let me oh, that's the way to do it. Look at this. Look at this. So I can actually zoom in. Yeah, I love it. So Amazon, we got a slight miss on the earnings per share, and we got a beat on revenue as well. MicroStrategy, good beat on revenue and earnings per share. Look at that. Look at the turnaround. No doubt Sensei will give you an update in the newsletter tomorrow. Reddit up 8.74 on revenue. You can't see the numbers on the screen, can you? That's better. Up 8.74 on revenue. Earnings per share up 30, almost 32%. Wow. What else we've got here? Got iron. There was a miss. Oh, almost 20% down on revenue. Earnings per share negative 189%. Roblox up 7% on revenue and earnings per share 6.25% up. That's good. What else we've got here? Monolithic Power Systems, they are up 1.3% and on revenue and 11.66 on earnings per share. What else we've got here? Well, let's unwrap it. We've got like 75 more companies. So is there anything we have been covering? We have been dedicating our airtime to. I don't recall anything. Okay. I don't see anything we would have covered. We would have audience for as well. No. Tomorrow is Friday. We've got Under Armour in the morning. Got Philip Morris International. Very interesting. I'm pretty sure Tim Rogers would be interested in Philip Morris. We've got Centene Corporation. We have Biogen. What else we've got? Canopy Growth. Very interesting as well. And in the afternoon, is there anything noteworthy? Chromocell Therapeutics Corporation, Lumos Pharma, CareMax, HMN Financial. Yeah, there's nothing interesting for tomorrow. Okay, let me check on the call. Music. Oh, they are playing jazz music. They are playing jazz music. I cannot play it because of copyright reasons, but it's very funky. No, it's not funky. It's very quiet and steady. Let me put it this way. What is the stock doing? Amazon currently sitting at 203.25. Can I fix the dark theme? How can I fix the dark theme? Settings. Canvas. No. There should have been a button that just switches between light and dark theme. I can't find it. Is it this one? Trade video broker? No. Because I've got the colors adjusted for my analyst room, because the camera doesn't like the black background behind me with the lights. Okay, let's just leave it. Let's not waste too much time. $202.25. Let's have a look at the markets. The S&P 200 2% down, 6,764. Nasdaq is holding down at just so notification about Amazon. Nasdaq is holding down 2.5% on the day. Bitcoin $63,119. XRP coming slightly down, $1.15, just below $1.16. Ethereum 1,845. Gold holding the level of 4,770, slightly above, and silver 71, just holding $71 per ounce. That is the markets. Let's have a look at Amazon again. $202.10. We are about 6-7 minutes away from the actual call. Let's have a look what else we've got here in the filing. Again, we have a lot of numbers. If you can pause and zoom in, help yourselves, fill your boots, but I can't present this format on the screen to make it understandable and visually clear. So my apologies. Here are more numbers. Net income massively up this year. More numbers as well. What else we've got here? North American sales up. International sales up. We've been through this. Amazon Web Service very, very highly up as well, year over year. Consolidated net sales 637 or 638 billion in 2024, and 716 or 717 billion in last year. So net sales are up as well. Operating expenses. So our operating expenses from 569 to 636 billion. Excuse me. Operating income is up as well by almost 11 billion. Total non-profit operating income from 21 million to 17.336 billion. Okay. I don't know why that why there's such a massive leap. Segment highlights: year-over-year net sales growth. Well, I might be able to zoom this in slightly. North America, same net sales growth previous year compared to the year before. So 2024 and 2025, same net growth. Whilst, hang on, I'm getting a message from the director. Let's see if it's related to me or if it's to the team. Now guess what? The postman's back. Okay, that's not a message for me. That is a message for the team. That's great. You know, I should have had an earpiece connected to Martyn's studio and listen the instructions from him, really. So let's have a look at the stock price. We are falling. We are coming lower and lower. So it might have not been an overreaction. Let's wait for the guidance. Sitting now just above $200. International sales year over year. We have a growth. We have a good growth in international from 9% in 2024 to 13% in 2025. Amazon Web Services are slightly up year over year and consolidated slightly up. A net sales mix, North America actually down in percentage, international up by 1% point, and Amazon Web Service up by 1% point as well. Let me just get back to this. We are about 3 minutes away from the actual call. I am monitoring the audio. We are still playing jazz music. Assets, cash and cash equivalents. We are up to 80, almost 87 billion for last year compared to previous 70, almost 79 billion from 2024. Marketable securities, we are up by almost 14 billion. Inventories, slightly up by almost 4 billion. Accounts, receivable, net and other. So we are up on this as well. Total current assets up 229 billion from the previous year, 2024, 190 billion. Property and equipment, operating leases, goodwill, other assets. Okay, you can pause it, you can zoom in. You cannot see it over me anyway. That might be better. Okay, let's catch up with the chat. Let's see your poll results. We are getting fair few votes in. We are running a poll. We are running a poll in the chat. Are you using Amazon Prime? Are you using it for shopping, for watching videos, for both, or not at all? So if you want to let me know in the chat, cast your votes in. We are about 2-3 minutes away. We're about 2-3 minutes away from the actual earnings call. So where did we take off? Martyn was sending some links. Okay. Discord does not ask you for address. Yes. Okay, we have conversation about Discord. Only birthday. Vanessa is here. Welcome to the event. Lovely to see you here. Steven as well. Did I miss Steven? Steven Lewandowski, because he's our oil baron. He's our oil guru. Tidy Big Dog. Can't send friend request. Okay. We are having separate conversations here. We are talking about Discord. I'm buying Amazon here. Love it, says Dylan Wilson. Double check the link. Okay. We are having conversations about Discord and how to get to Discord. That's fine. To make it dark theme, you have to go to top left on TradingView, click on your profile pic. Thank you very much for the advice. Click on your profile pic. Sure. I'm being thick. Am I? There we go. But I don't think it's gonna change it for me because I may have changed my background colors. Yeah, because I manually have changed my background colors. Saying that, I can very quickly fix it now. Thanks for the tip, by the way. I can fix it on the fly. Canvas, there we go. I can change it to dark here. There we go. Now we are cooking on gas. So thank you for the advice. Who was it? Dylan, thank you for the advice. Cover some while we have to wait for Amazon, maybe some eVTOLs. Yeah, we don't have any eVTOL earnings yet. There is Archer and Joby in about 2-3 weeks time. It's not confirmed yet, but we are expecting them last week of the month. Reddit, please. Yeah, we've been through it. Any Whisper, you're almost there. You're almost here. Any Whisper, I'm not following. We are still waiting for the actual earnings call webcast. We are about 1-2 minutes late so far, but they usually start fairly on time. So I'm monitoring this. The audio is still playing. Don't go anywhere. What is the chart doing? Just below $202. Let's see what the reaction for the actual presentation is going to be. And let's close the poll as well. Let me just quickly catch up with the chat. I'm after messaging on Discord. Okay. Amazon in the USA, Temu and Alibaba in the world. Yeah, but they don't deliver so quickly, do they? I'm hearing audio. I'm hearing the call coming through. So I will go quiet and I will let you enjoy the actual presentation.
Question and answer session. Today's call is being recorded. And for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Mr. Dave Fildes. Thank you, sir. Please go ahead. Hello, and welcome to our Q4 2025 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2024. Our comments and responses to your questions reflect management's views as of today, February 5th, 2026 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many GAAP measures, including fluctuations in foreign exchange rates and energy prices, changes in global economic and geopolitical conditions, tariff and trade policies, resource and supply volatility, including for memory chips, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. We're reporting $213.4 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $25 billion, and trailing 12-month free cash flow was $11.2 billion. We're seeing strong growth, and with the incremental opportunities available to us in areas like AI, chips, low Earth orbit satellites, quick commerce, and serving more consumers' everyday essentials needs, we have a chance to build an even more meaningful business at Amazon in the coming years with strong return on invested capital, and we're investing to do so. We're already seeing strong demand in these areas, even in these early innings. I'll start with AWS. AWS growth continued to accelerate to 24%, the fastest we've seen in 13 quarters, up $2.6 billion quarter over quarter and nearly $7 billion year over year. AWS is now a $142 billion annualized run rate business, and our chips business, inclusive of Graviton and Trainium, is now over $10 billion in annual revenue run rate, growing triple-digit percentages year over year. As a reminder, it's very different having 24% year-over-year growth on a $142 billion annualized run rate than to have a higher percentage growth on a meaningfully smaller base, which is the case with our competitors. We continue to add more incremental revenue and capacity than others and extend our leadership position. We're continuing to see strong growth in core non-AI workloads as enterprises return to focusing on moving infrastructure from on-premises to the cloud, along with AWS having the broadest functionality, strongest security and operational performance, and most vibrant partner ecosystem. AWS continues to earn most of the big enterprise and government transitions to cloud. Since our last call, we announced new agreements with OpenAI, Visa, NBA, BlackRock, Perplexity, Lyft, United Airlines, DoorDash, Salesforce, U.S. Air Force, Adobe, Thomson Reuters, AT&T, S&P Global, National Bank of Canada, the London Stock Exchange, Choice Hotels, Accenture, Indeed, HSBC, CrowdStrike, and many more. More of the top 500 U.S. startups use AWS as their primary cloud provider than the next two providers combined. We're adding significant EC2 core computing capacity each day, and the majority of that new compute is using our custom CPU silicon, Graviton. Graviton is up to 40% more price performant than leading x86 processors and is used expansively by over 90% of AWS's top 1,000 customers. Graviton itself is a multi-billion-dollar annualized run rate business, growing more than 50% year over year. We consistently see customers wanting to run their AI workloads where the rest of their applications and data are. We're also seeing that as customers run large AI workloads on AWS, they're adding to their core AWS footprint as well. But the biggest reason that AWS continues to gain AI share is our uniquely broad top-to-bottom AI stack functionality. In AI, we're doing what we've always done in AWS, solving customer challenges. Let me give you some examples. The first challenge is having a strong foundation model to generate inferences or predictions. Customers are realizing as they get further into AI that they need choice, as different models are better on different dimensions. In fact, most sophisticated AI applications leverage multiple models. Whether customers want frontier models like Anthropic's Claude, or open models like Mistral or Llama, frontier intelligence with lower cost and latency like Amazon Nova, or video and audio models like 12 Labs or Nova Sonic, Amazon Bedrock makes it easy to use these models to run inference securely, scalably, and performantly. Bedrock is now a multi-billion-dollar annualized run rate business, and customer spend grew 60% quarter over quarter. A second challenge is how to hone the model for your application. Customers sometimes think if they have a good model, they will have a good AI application. It's not really true. It takes a lot of work to post-train and fine-tune a model for your application. Our SageMaker AI service, along with fine-tuning tools in Bedrock, make this much easier for customers. A third challenge is how to have a custom version of a foundation model that best leverages a company's secret sauce, their own data. To date, companies have tried to shape models with their own data late in the process, usually with fine-tuning or post-training. There's debate in the industry about this, but we believe that enterprises will want models trained on their own data at an early stage, at pre-training if possible, so their models have the best possible foundation for what matters most to each enterprise on which to learn and evolve. It's a little like teaching a child a foreign language early in their life. That becomes part of their learning foundation moving forward, and it makes it easier to pick up other languages later in their life. To solve for this need, we just launched Nova Forge, which gives customers early checkpoints on our Amazon Nova models, allows them to securely mix their own proprietary data with the model's data in the pre-training stage, and enables their own uniquely customized versions of Nova, what we call novellas, trained with their data early in the process. This will be very useful for companies as they build their own agents on top of a model. There is nothing else out there like this today and a potential game changer for companies. Another challenge is cost. I've said this many times, but if we want AI to be used as expansively as companies want, we have to make the cost of inference lower. A significant impediment today is the cost of AI chips. Customers are starving for better price performance, and typically and understandably, the dominant early leaders aren't in a hurry to make that happen. They have other priorities. It's why we've built our own custom silicon and Trainium, and it's really taken off. We've landed over 1.4 million Trainium 2 chips, our fastest ramping chip launch ever. Trainium 2 is 30 to 40% more price performant than comparable GPUs and is a multi-billion-dollar annualized revenue run rate business with 100,000 plus companies using it, as Trainium is the majority underpinning of Bedrock usage today. We recently launched Trainium 3, which is up to 40% more price performant than Trainium 2. We're seeing very strong demand for Trainium 3 and expect nearly all of our Trainium 3 supply of chips to be committed by mid-2026. And though we're still building Trainium 4, we're seeing very strong interest already. Looking ahead, the primary way companies will get value from AI is with agents, some their own, some from others, and there are several customer challenges that we're well positioned to solve. It's harder to build agents than it should be. For that, we've built Strands, a service enabling agents to be created from any model. Once agents are built, enterprises are apprehensive about deploying to production because these agents need to securely and scalably connect to compute, data, tools, memory, identity, policy governance, performance monitoring, and other elements. This is a new and hard problem where a solution has not existed until we launched Bedrock Agent Core. Customers are quite excited about Agent Core, and it's unlocking deployments. Customers also want to leverage others' useful agents, and we've built several, including Curo for coding, Amazon Quick for knowledge workers to leverage their own data and analytics, AWS Transform for software migration, and Amazon Connect for call center operations. We continue adding new capabilities, and usage continues to grow quickly. For example, the number of developers using Curo grew more than 150% quarter over quarter. In addition to agents that customers direct, customers are also becoming excited about agents that require less human interaction. They can be fully autonomous, run persistently for hours or days, scale out quickly, and remember context. At this past AWS reInvent, we launched Frontier agents to do that. Curo autonomous agents for coding tasks, AWS DevOps agents for detecting and resolving operational issues, and AWS security agents for proactively securing applications throughout the development lifecycle, and they're already making a big difference for customers. We expect to invest about $200 billion in capital expenditures across Amazon, but predominantly in AWS because we have very high demand, customers really want AWS for core and AI workloads, and we're monetizing capacity as fast as we can install it. We have deep experience understanding demand signals in the AWS business and then turning that capacity into strong return on invested capital. We're confident this will be the case here as well. I'll now turn to stores. We continue to expand selection, including more than 400 new beauty brands in the U.S. in 2025, like Bobbi Brown Cosmetics, Charlotte Tilbury, and Laura Mercier, and new fashion brands like Away Luggage, Converse, Diesel, Michael Kors, Nike, and The North Face. Our ultra-low priced offering, Amazon Haul, grew selection to over 1 million items under $10 and expanded to serve customers in more than 25 countries and regions. We continue to see strong customer response to everyday essentials and grocery. In 2025, everyday essentials grew nearly twice as fast as all other categories in the U.S., representing 1 out of every 3 units sold in our store. And we've become a go-to grocery destination for over 150 million Americans, mostly through online shopping and Whole Foods. With over $150 billion in gross sales, Amazon is clearly a large grocer at this point. Customers in thousands of U.S. cities and towns can now get perishables delivered same day alongside millions of other items, and customers who use that service shop more than twice as often as customers who don't. We plan to expand to many more communities in 2026, and we also plan to open more than 100 new Whole Foods Market stores over the next few years as we work to make grocery shopping easier, faster, and more affordable for customers. We remain committed to staying sharp on price and continue to meet or beat other retailers' prices. A recent study from Profitero showed that Amazon is America's lowest priced retailer for the 9th straight year, 14% lower on average than other major online retailers. We again achieved our fastest ever delivery speeds for Prime members around the world in 2025. In the US, we delivered nearly 70% more items same day than the year before. We also continue increasing speed for rural customers, with nearly 2 times more average monthly customers in rural areas receiving same-day delivery year over year. Same day is our fastest growing delivery offering, and nearly 100 million customers used it last year in the US. And the team is continuing to innovate. We've launched Amazon Now in India, Mexico, and the UAE, ultra-fast delivery on thousands of items in about 30 minutes or less. And we're testing it in several communities in the US and UK. It's early, but customers are loving it. For example, in India, customer response exceeded our most optimistic expectations, and we're seeing Prime members triple their shopping frequency once they start using it. Expanding our same-day delivery coverage also leads to meaningfully later cutoff times for orders, which is a big deal for customers. For example, on Christmas Eve, customers in about 4,000 U.S. cities could order items up until midday and get them that same day. Another example is our recently launched feature, Add to Delivery, which enables Prime members in the U.S. to add items to their upcoming Amazon deliveries with just one tap without going through checkout again or paying additional shipping fees. Just 6 months after launch, Add to Delivery already makes up about 10% of all Prime volume fulfilled through the Amazon network each week. While this seems simple on the surface, this feature is supported by a lot of invention where we need to figure out in real time and with incredibly low latency what items among Amazon's hundreds of millions of products are available to add to a customer's upcoming deliveries, surface them, find a way to include in their packages, and deliver within the same customer promise. The stores team is also continuing to innovate and deliver for customers with AI. Our agentic AI shopping assistant, Rufus, is rapidly expanded. Rufus can research products, track prices, and auto-buy, purchasing a product in our store when it reaches your set price. It can also now shop tens of millions of items in other online stores and make purchases for customers using our agentic Buy For Me feature. Last year, more than 300 million customers used Rufus. In addition, customers used Lens, our AI-powered visual search tool, to find products with a phone's camera, a screenshot, or a barcode, and they did it 45% more year over year. Moving on to Amazon Ads, we're pleased with the continued strong growth across our full funnel offerings, generating $21.3 billion of revenue in the quarter and growing 22% year over year. Sponsored products advertising in our store continues to be our largest ads offering, and the combination of trillions of shopping, browsing, and streaming signals with advanced AI and machine learning let us deliver highly relevant and useful ads for customers. We saw continued growth in Prime Video ads, which is now available in 16 countries and is contributing meaningfully to our revenue growth. Prime Video has an average ad-supported audience of 315 million viewers globally, up from 200 million in early 2024. Our ads team is also innovating with AI. We recently announced our ads agent, which lets brands use AI to create and optimize campaigns at scale, implement effective campaign targeting, and quickly create actionable insights. And our creative agent lets advertisers research, brainstorm, and generate full funnel ad campaigns from concept to completion using conversational guidance in Amazon's retail data, transforming what was a weeks-long process into just hours. We're also continuing to invent and see momentum in several other areas, and I'll mention just a few. Starting with live sports on Prime. The 4th season of Thursday Night Football broke more records. It was our most watched season ever, averaging more than 15 million viewers, a 16% year-over-year increase, and a 3rd consecutive year of double-digit growth. And the Packers versus Bears wildcard game was the most streamed NFL game in history with 31.6 million viewers, clearing the prior mark by more than 4 million. We just made Alexa Plus available to all customers in the US, free for Prime members and $19.99 a month for non-Prime members. Alexa Plus continues to get even better and more capable, and we've added new ways to interact with Alexa, including a new chat experience at alexa.com, a redesigned mobile app, and new integrations with third-party devices like Samsung TVs and BMW cars. We've also added new features like the ability to answer a Ring doorbell on a customer's behalf and more ways to shop or manage a home. And finally, the team is making rapid progress on Amazon Leo, which will bring connectivity to consumers, enterprises, and governments in places where they don't have broadband connectivity. Our enterprise-grade customer terminal, Leo Ultra, is the fastest satellite internet antenna ever built, delivering simultaneous download speeds of up to 1 gigabit per second and upload speeds of up to 400 megabits per second. Leo will offer enterprise-grade performance and advanced encryption with secure private networking that bypasses public internet, connecting directly to AWS. We've launched 180 satellites, have more than 20 launches planned in 2026, more than 30 in 2027, and expect to launch commercially in 2026. We have dozens of commercial agreements already signed, including with AT&T, DirecTV Latin America, JetBlue, and Australia's national broadband network, and have many more on the way. It's been an action-packed year of innovation and progress, and we've hit the ground running in 2026. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results. Worldwide revenue was $213.4 billion, a 12% increase year over year, excluding the 150 basis points favorable impact of foreign exchange. In Q4, we reported worldwide operating income of $25 billion. This operating income includes three special charges, which reduced operating income by $2.4 billion. The first charge of $1.1 billion is for the resolution of tax disputes associated with our stores business in Italy and the settlement of a lawsuit. This charge primarily impacts our international segment and is largely recorded in the fulfillment and other operating expense line items. The second charge of $730 million is for the estimated severance costs. This charge impacts all three of our segments and is recorded primarily in the fulfillment, sales and marketing, and technology and infrastructure expense line items. The third charge of $610 million is for asset impairments, primarily related to physical stores. This charge primarily impacts the North America segment and is recorded in the other operating expense line. Moving on to our segment results. In the North America segment, fourth quarter revenue was $127.1 billion, an increase of 10% year over year. International segment revenue was $50.7 billion, an increase of 11% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 12% year over year, which was our highest quarterly growth rate in 2025. The fourth quarter marked a strong finish to the year as we delivered for customers during the peak holiday season. Our sharp pricing, vast selection, and record fast delivery speeds resonated with customers. They appreciated the convenience of receiving their items quickly, from gifts for family and friends to everyday essentials and perishable groceries. Our millions of global third-party sellers continue to be an important contributor to our broad selection. In Q4, worldwide third-party seller unit mix was 61%. We continue to invest in tools and services, including a comprehensive suite of AI tools that help our selling partners manage and grow their businesses. Shifting to profitability, North America segment operating income was $11.5 billion with an operating margin of 9%, up from an 8% margin in Q4 of 2024. International segment operating income was $1 billion with an operating margin of 2.1%. Excluding the impact of special charges mentioned earlier, the international segment operating margins also expanded year over year. We're pleased with the fulfillment network performance throughout the peak season. We made strong progress improving the cost structure of our network over the past few years. In the U.S., our regionalized network is operating at scale, and we continue to make refinements. This regionalization has improved local inventory placement, leading to faster delivery and lower costs. Last year, U.S. Prime members received over 8 billion items the same or next day, up more than 30% year over year, with groceries and everyday essentials making up half of the total items. For the third year in a row, globally, in 2025, we achieved both our fastest ever delivery speeds for Prime members while also reducing our cost to serve. By leveraging our existing U.S. network, we can now deliver perishable groceries to customers in more than 2,300 cities and towns, all with same-day delivery. We saw significant adoption of this service throughout the year. When customers engage with our perishable offering, they demonstrate notably higher monthly spend compared to those who do not shop the category. We also see that customers shopping perishable groceries add 3 times more items to their same-day delivery orders. Looking ahead, we see further opportunity to enhance productivity in our global fulfillment network while delivering at faster speeds for customers. We will continue optimizing inventory placement to drive down distance traveled, reduce touches per package, and improve package consolidation, as well as launch robotics and automation to increase efficiency and elevate the customer experience. Shifting to advertising. Advertising revenue grew 22% in the fourth quarter, and we added over $12 billion of incremental revenue in 2025 alone, as our full funnel advertising approach of connecting brands with customers is resonating. Simplifying the advertiser experience to enable brands to better reach customers wherever they are. Moving next to our AWS segment. Revenue was $35.6 billion, and growth accelerated to 24% year-over-year. We added $2.6 billion in quarter-over-quarter revenue, and AWS now has an annualized revenue run rate of $142 billion. This acceleration was driven by both core and AI services as customers continue to modernize their infrastructure and migrate workloads to the cloud. Our AI offerings continue to resonate with customers, including our agentic capabilities. This growth was helped in part by the more than 1 gigawatt of capacity we added in Q4. In 2025, AWS added more data center capacity than any other company in the world. AWS operating income was $12.5 billion. We're seeing strong top-line growth while remaining focused on driving efficiencies across the business. This includes investing in software and process improvements to optimize server capacity, developing a more efficient network using our lower-cost custom networking gear, and advancing custom silicon. At the same time, we continue to rapidly develop products and services on behalf of customers. As we've long said, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making at any point in time. Turning to cash flows, our full-year operating cash flow increased to $139.5 billion in 2025, up 20% year-over-year, due primarily to improved operating income and changes in working capital. Now turning to our Q1 financial guidance. Q1 net sales are expected to be between $173.5 billion and $178.5 billion. This guidance anticipates a favorable impact of approximately 180 basis points from foreign exchange rates. As a reminder, global currencies can fluctuate during the quarter. Q1 operating income is expected to be between $16.5 billion and $21.5 billion. A few things to mention on the operating income guidance. Within the North America segment, we do expect a year-over-year cost increase of approximately $1 billion related to Amazon Leo. We have more than 20 launches planned in 2026 and more than 30 in 2027, which means we're spending more on launching satellites each year. Select enterprise customers are testing Amazon Leo services now, and we expect a wider commercial rollout later this year. As a reminder, today we do expense most of these Leo costs as incurred. We expect that later in the year, many of these costs, such as satellite manufacturing and launch services, will be capitalized. Within the international segment, we're continuing to invest more in our stores business to enhance the customer experience and to encourage retail demand to move online more quickly. This includes bringing faster delivery options, including Amazon Now, our service which delivers to customers in 30 minutes or less. We're also working hard to stay sharp on pricing and seller fees, and there are countries where we've had to be more aggressive to meet or beat competitors' prices. We like these investments because they will delight customers, grow our business, and we believe they will generate long-term positive return on invested capital. As we enter 2026, I'm energized by our team's strong execution. I want to thank everyone across the company for their hard work on behalf of our customers. We remain focused on driving an even better customer experience, which is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your telephone keypad. We ask that when you pose your question, you pick up your handset to provide optimum sound quality. Once again, to initiate a question, please press star, then 1 on your touch-tone telephone at this time. Please hold while we poll for questions. Thank you. Our first question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Okay, thanks. I think, Brian, let me throw this to you or maybe to Andy. On the strong long-term return on invested capital, I think that's the debate in the market today. So could you give us a little bit more insight into how you think investors will be able to see that? Either talk about the duration of the CAPEX cycle that you're going through now, or what we should see in terms of profitability levels, and maybe also talk about like other de minimis or minimum free cash flow generation levels that you don't want to go below as you go through this CAPEX cycle. Just help us, get to that, get to your level of confidence in having a strong long-term return on that invested capital. Thank you.
Yeah, sure, Mark. Thank you. I'll start from a financial side. So on the investments we're making, as Andy said earlier, we are putting into service with customers all capacity that we're getting, and it's immediately useful. And we're also seeing a long arc of additional revenue that we see from other customers and backlog and commitments that people are anxious to make with us, especially for AI services. So you can see that's working its way into our P&L, both through CAPEX and also through our operating margin in AWS. AWS is 35% operating margin through Q4, up 40 basis points year over year. As we talked about before, that is going to fluctuate over time. It certainly has a headwind from the investments in AI and the depreciation on that CAPEX. But we also work very hard to offset that with efficiencies and cost reductions. So we will see how that develops over time. So, we see strong return on invested capital. We see strong demand for these services, and we continue to like the investments in this area.
I would add to that, if you look at the capital we're spending and intend to spend this year, it's predominantly in AWS. And some of it is for our core workloads, which are our non-AI workloads, because they're growing at a faster rate than we anticipated. But most of it is in AI. And we just have a lot of growth and a lot of demand. And when you're growing 24% year over year with an annualized revenue run rate of $142 billion, you're growing a lot. And what we're continuing to see is as fast as we install this capacity, this AI capacity, we are monetizing it. So it's just a very unusual opportunity. As I've shared a lot of times, I passionately believe that every customer experience that we know of today is going to be reinvented. With AI, there are going to be a whole bunch of customer experiences that none of us ever imagined that are going to become the norms of how we all operate every day and what we use. And I think the other thing is that if you really want to use AI in an expansive way, you need your data in the cloud and you need your applications in the cloud. Those are all big tailwinds pushing people towards the cloud. So we're going to invest aggressively here, and we're going to invest to be the leader in this space as we have been for the last number of years. We have, I think, a fair bit of experience over the years in AWS of forecasting demand signals and doing it in such a way that we don't have a lot of wasted capacity and that we also have enough capacity to serve the demand that's there. And I think we've also proven with AWS over the years in how we build data centers and how we run them and how we invent in there. If you think about our chips and our hardware, our networking gear, and how we've invented in power, that this isn't some sort of quixotic top line grab. We have confidence that these investments will yield strong returns on invested capital. We've done that with our core AWS business, and I think that will very much be true here as well. And I think some of the things that you will see over time in the AI space is you're going to keep seeing all of the inference services, which is going to be the majority of the long-term AI workloads is going to be inference.
You're going to see the inference keep getting optimized. You're going to see higher utilization on those services. You'll see prices normalize over a period of time. And then I think the companies that have not just the excellence in infrastructure, but also the components that give customers better price performance and give those companies themselves better economics are going to have advantaged financials. And I think if you look, we're already off to a really good start, having Trainium underneath the majority of our Bedrock service. And that's not just giving customers better prices, but it also gives us better economics. And so we see that following the same sorts of patterns we saw in the early days of our core AWS investment. I'm very confident we're going to have strong return on invested capital here.
And the next question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks so much for taking questions. Can you just talk about how Project Rainier is running with Anthropic after its first full quarter? And I think in the release, it talks about 500,000 chips, but a few months ago, you talked about getting to 1 million as well. So if you could clarify that. And then maybe just to follow up on Mark's question, are there any financial guardrails or governors in place that we should think about around the spend, just in terms of operating income growth or positive free cash flow? Thanks.
Yeah, I'll start with the Trainium piece. We are very excited about the growth that we see in Trainium and the future that we have there. I think if you look at what's happened in the early innings of AI over the first few years, you see a lot of usage, but customers are really thirsty for better price performance. And Trainium has 30 to 40% better price performance than comparable GPUs, so it's very compelling to customers. You mentioned Project Rainier. Anthropic is building they're training their next Claude model on top of Trainium 2. And that's what Project Rainier is. We talked about 500,000 chips there. You will see that continuing to increase. They're also using a fair bit of Trainium 2 for other workloads and their own APIs beyond just Project Rainier. But Trainium is a multi-billion-dollar annualized run rate business at this point, and it's fully subscribed. And what you're also seeing is Trainium 3, which is the next version of Trainium, which we just started shipping. That's 40% more price performant than Trainium 2. And there's very substantial amount of interest there. We expect that nearly all of that supply will be committed by somewhere around the middle of this year. And we're just in the process of building Trainium 4. There's very substantial interest in Trainium 4, which is coming in 2027. And we're already having conversations about Trainium 5. So there is a lot of interest in Trainium at this point. And I think I think people know about our chips capability, our chips business, but I'm not sure folks realize how strong a chips company we've become over the last 10 years. If you look at what we've done with Trainium, if you look at what we've done with Graviton, which is our CPU chip, which is about 40% better price performance than comparable x86 processors, 90% of the top 1,000 AWS customers are using Graviton very expansively. If you combine Trainium and Graviton, it's well over a $10 billion annualized run rate business. And it's still very early there. So I'm very optimistic about what we're seeing. We have, the Project Rainier has gone very well. I think Anthropic is quite pleased with it. We've learned a lot in the process as well, but it's early days with what's possible here. This is a big business that's getting bigger and has a lot of potential. And I'd briefly comment on your second question that, we are, as I mentioned, this is what, I think this is an extraordinarily unusual opportunity to forever change the size of AWS and Amazon as a whole. I think it also is an extraordinary opportunity for companies to change all their customer experiences and for startups to be able to build brand new experiences and businesses that would have taken much longer to try to accomplish before that they can do right now. And so we see this as an unusual opportunity, and we are going to invest aggressively here to be the leaders because like we've been the last number of years and like I think we will be moving forward.
Thank you. The next question comes from the line of Ross Sandler with Barclays. Please proceed with your question.
Great. Andy, you mentioned a few calls back how the AI market was currently a bit top heavy with a lot of the spend kind of clustering around a few of the AI native labs. So how is that changing as you look out into 26? And specifically, how do you think you might extend your relationship with a company like OpenAI to maybe help Amazon's AI efforts, both on the retail side and the AWS side? Thanks a lot.
Yeah, the way I would describe what we see right now in the AI space is it's really kind of a barbelled market demand where, on one end, you have the AI labs who are spending gobs and gobs of compute right now, along with what I would consider a couple runaway applications. And then at the other side of the barbell, you've got a lot of enterprises who are getting value out of AI in doing productivity and cost avoidance types of workloads. These are things like customer service or business process automation or some of the fraud pieces. And then in that middle of the barbell are all the enterprise production workloads. And I would say that the enterprises are in various stages at this point of evaluating how to move those, working on moving those, and then putting them into production. But I think that middle part of the barbell very well may end up being the largest and the most durable. And I would put in the middle of that barbell too, by the way, I would put just the altogether brand new businesses and applications that companies build that right from the get-go run in production on top of AI. And so I think that, to me, when I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI, but the lion's share of that demand is still yet to come in the middle of that barbell. And that will come over time. It will come as you have more and more companies with AI talent, as more and more people get educated with that AI background, as inference continues to get less expensive, and that's a big piece of what we're trying to do with Trainium and our hardware strategy. And as companies start to have success in moving those workloads to further and further success in moving those workloads to run on top of AI. So I think it's just a huge opportunity. It's still in the relative early stages, even though it's growing at a very unprecedented clip, as we've talked about. And then I think, how do we see our relationships extending with other companies like OpenAI? I would tell you that this movement and what's happening in AI is it's very broad. It's going to be a lot of companies. It is a lot of companies already. There's a number of AI labs, but almost every company you talk to, almost every conversation we have on the AWS side starts with AI. And so we have very significant relationships with a lot of different companies. I think we announced an agreement with OpenAI in November. We're excited about that agreement. It's a big one. And we have a lot of respect for the company, and we hope to continue to extend our partnership over time. But this AI movement is not going to be a couple companies. It's going to be thousands of companies over time.
Thank you. The next question comes from the line of Michael Morton with MoffettNathanson. Please proceed with your question.
Hi, good evening. Thank you for the question. This one's on the retail business. Andy, you've talked about how you're passionate this is going to change experiences across the board, and you've shared some encouraging data points on Rufus. And we're seeing all the other internet platforms roll out agentic protocols. I would love to see how you think this plays out for the retail business and the on-site ads portion of the retail business. Is what seems like it could be a compression in the funnel as consumers get better answers over time. Anything there would be great. Thank you.
I'm very optimistic about the customer experience that will ultimately be what customers use for agentic shopping. And I think it's good for customers. I think it's going to make it easier for them. It's a big piece of why we've invested as significantly as we have in our own shopping assistant in Rufus. And if you haven't checked out Rufus recently, I really encourage you to do so. It's gotten much, much better and it keeps getting better every month. And, we have 300 million customers who used Rufus in 2025. Customers who used Rufus are about 60% more likely to complete a purchase. And so you're seeing a lot of usage of it and a lot of growth, and I think it's very useful. And I think at the same time, we will have relationships with third-party horizontal agents that can enable shopping as well. We have to collectively figure out a better customer experience. It's still, these horizontal agents don't have any of your shopping history. They get a lot of the product details wrong. They get a lot of the pricing wrong. And so, we have to try to find a customer experience together that's better and, a value exchange that makes sense for both parties. But I'm very hopeful that we'll get there over time. We continue to have a number of conversations. And then I think you're going to have to look at, as time goes on, which types of, which shopping agents are consumers going to use. And it kind of reminds me in some ways of the early days of kind of all the search engines that were referring traffic to retailers. And, it's still a relatively small portion of the overall traffic and sales. But, of that fraction, you have to ask how many consumers are going to prefer using a horizontal agent where it's kind of a middle person between the retailer and the consumer versus wanting to use a great agent from that retailer that has all its shopping history and that has all the data right there and makes it easy if you're just, spearfishing for something to shop for it right there. Or if you want to do discovery, you can do it there and it's got the best data on shopping. I think a lot of customers are ultimately going to choose to use a great shopping agent from that retailer. Because if you think about what consumers really want in retail, in a retailer, they want really broad selection, they want low prices, they want really fast delivery, and then they want a retailer that they can trust and that takes care of them. And I think horizontal agents are pretty good at aggregating selection, but retailers are much better at doing all four of those items. And so I'm very optimistic that people will use our shopping agent. It's off to a great start. I also expect that we'll work with other third-party agents over time as we work on the issues I mentioned earlier.
Thank you. The next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed with your question.
Thanks for taking my question. Andy, I want to ask you one about the global retail business this year. I know there's a lot of areas of investment in it that you're talking about to sort of improve the service, make it more durable over the long term, et cetera. But I'm assuming there are also sources of efficiency you expect to see this year. So can you sort of help us understand both sides of the ledger on retail this year? Where are some of the areas where you see the potential for sources of efficiency and cost to serve savings? And then where should we be thinking about the areas of investment to sort of drive more durable growth, robotics, et cetera? How does that sort of break down?
Yeah. So I would say on the side of continuing to invest to keep growing the retail business, the kind of core drivers of demand continue to be the same. We're going to work really hard to expand selection, and you've seen what we've done over the last several years. The expansion of selection has been broad, and you'll see it on both ends of the spectrum. We have a lot more of those luxury brands that have built presences in Amazon, had success, and found that we could manage their brand presentation the right way, and they've been very happy. I mean, you only have to look at L'Oreal as an example too, of just how fast that business is growing and how happy our partners have been. And at the same time, we are working really hard to continue to expand the amount of everyday essentials that we offer our customers. And the growth in everyday essentials in our business is really remarkable, as I mentioned in my opening comments. And 1 out of 3 units now that we move are everyday essentials. And what we find there is that the more that customers can rely on us for everyday essentials and the lower ASP items, they just choose to do more of their downstream shopping with us in every way. We're just more front of mind. And so, I think a big piece of why we have captured more and more of those everyday essentials, and you see it also in our grocery business with perishables too, is just our speed of delivery improvements over the last 3 years has been really marked. I mean, it's customers. It's the one thing I get stopped on the street most often about, which is I just can't believe how quickly from when I order something I get it to my door and how reliable you are. I think along that speed of delivery piece, it's also quite interesting what's happening with quick commerce, and we have this offering called Amazon Now that we've largely started outside the U.S. and India and the UAE and Mexico that gets thousands of items to customers within 30 minutes. And it really is, it's quite interesting how quickly that is growing. And I think that it's just another one of those things like everyday essentials that when you're able to order more and more from Amazon, you just think of Amazon first if it's a great experience that we're offering for whatever you're looking for. But if you look in India, which is the place we've rolled out quick commerce the fastest, customers who try quick commerce are shopping with triple the frequency than they did before they tried us on quick commerce. So those are all areas I think are pretty excited that we're expanding. You'll see us continue to expand what we're doing on the perishable side too, which we're quite excited about. We are able to deliver perishables same day in thousands of cities around the world now. In the cities in which we have those perishables available, 9 of the 10 top items that are ordered in that geography are perishables. So we're just having a lot of success with that too. And people who buy perishables from us, after they buy perishables, they're shopping with us twice as frequently. So a lot of good things to like there. And then, on the efficiencies, we always have a very long list of these that we're working on, Brian. And it's true today as well. Like if you look, even, I talked a lot about regionalization in our fulfillment network, and particularly in the U.S., over the last couple of years. And I said we weren't done honing that, and that's true. It's just we don't talk about it every time. But if you look at what we've done there, we've extended the number of regions. It was 8, it's now 10. We've extended regionalization to what we do with our inbound delivery to be much more efficient, being able to get more items closer to customers more quickly. We have we're doing a lot of work, and we've made a huge amount of progress in being able to get more units into each box. And as we're able to get more units into each box, it obviously saves shipments, and we drive better operating income when we do that. And we've made very significant progress there, but have a lot more planned. It's part of, by the way, that improvement is part of what helps us do things like I was talking about earlier in adding to a delivery in near real time. And then, robotics, as you mentioned, is another big one for us. We have over 1 million robots today in our fulfillment network. They take care of all sorts of functions, but still a fraction of what I think we're going to be able to enable over time, which will allow we'll always have a lot of people that we employ in our fulfillment network, but they'll leave to the robotics things that, that are more repetitive. So it's better productivity for the business, more safe for our teammates, and there's real cost efficiencies in that as well. So a lot on both sides of the ledger, as always.
Thank you. And our final question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. Maybe a few parts just on AWS. Can you speak to the current state of your revenue backlog as of Q4, and also discuss a little bit about what you see both for internal use cases and external client needs with respect to any imbalance between supply and demand around AI efforts, and how you think about closing the gap on those as more capacity comes online through 2026? Thank you.
Yeah, that's a lot of parts. I'll start with the first one, which is on backlog. Our backlog is $244 billion. That's up 40% year over year. I think it's up 22% quarter over quarter. We have a lot of deals that are in the pipeline. There's just, as I mentioned earlier, there is a lot of demand for AWS right now in the AI space and also in the core AWS space. Your second question was internal and external use cases. And then the impact around supply and demand. The vast majority of our the capital that we spend and the capacity that we have is consumed by external customers. Amazon has always been a very large AWS customer, a very helpful AWS customer because they're very demanding and they use the services very expansively and stretch the limits as we launch things. So they've always been a very important big customer, but always a very small fraction of the total, and that's true today in AI as well as the overall AWS business. Internally, we have all sorts of ways that we are using AI. We have over 1,000 AI applications that we've either deployed or in the process of building, and they range from our shopping assistant in Rufus that we were just talking about to Alexa Plus, which is a really large-scale generative AI application, to applications in our fulfillment network that allow us to have more accurate forecasting predictions, to how we do customer service and our customer service chatbot, to how we are making it much easier for brands to create advertisements and to optimize all their campaigns across the full funnel of advertising options we have. To in live sports, if you watch Thursday Night Football, you can see defensive alerts which predict which player is going to blitz, or pocket health. I mean, in every one of our businesses, you see a very broad use of AI to improve the customer experience, and in many cases, just to completely reinvent what was possible before. I mean, it's pretty neat to use something like Lens, where you may see something you want to buy. You can just take a picture of it in the app, and it finds the item on the detail page. You can buy it in one click. It's kind of magic. And, externally, I would say it's kind of what I said earlier. You have AI labs, consuming lots and lots of capacity, both for training as well as for the inference and the research across what they're doing with their different applications and models. We see enterprises, all sorts of workloads, customer service automation, business process automation, fraud, completely reinventing their applications, agentic coding applications, legal applications. Suno is a really cool example of an AWS customer that's kind of reinvented how you can write music and build music. So really across the board. And, and I just think on the supply and demand, what I would tell you is, we're growing 24% year over year on a $142 billion annualized run rate business. So we're growing at really an unprecedented rate. Yet I think every provider would tell you, including us, that we could actually grow faster if we had all the supply that we could take. And so we are being incredibly scrappy around that. If you look, in the last 12 months, we added 3.9 gigawatts of power. Just for perspective, that's twice what we had in 2022 when we were an $80 billion annual run rate business. We expect to double it again by the end of 27. We added 1.2 gigawatts of power in Q4, just quarter over quarter. Our team is being aggressive and scrappy and inventive and adding capacity as fast as we can. We'll add a lot more in 26 and 27 and in 28 for that matter. And And we're very optimistic we can continue to grow in the ballpark of what we have.
Thanks for joining us on the call today and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon, and we look forward to talking with you again next quarter.
There we go. How about the guidance? How about the call? Did you like it? Did you not like it? We'll wrap it up for about 5 minutes, and then I will send you all to either the extra channel or to Martyn's Discord, where he will be answering live Q&A. So, what about a reaction? What about a reaction? 10% down. Let me just close this. 10% down on the earnings, on the actual numbers. How about that? We have been running a poll in the chat. And it's disappeared. And it's gone. Oh, right, it's closed now. So, listening to the call. Is Amazon buy, hold, or sell? 35% undecided, 29% hold, 26% wants to buy, and 10% only sell. So, we have mixed emotions. We don't have any, I didn't see any questions. I saw there were some questions about Discord. The link is here in the chat in Discord. If you follow the instructions, if you read through the instructions on Discord, on the main page, that will talk you through and get you there. Here, pinned in the top, there's a link to Martyn's live event, live Q&A, starting in about a couple of minutes. We'll have a look at the chart again. Here we are just holding above $200. I will be sending you all to the extra channel. Let me just check if everything is set up, which it should have been set up. So I did very amazing job on that through the week. Customization, yes. So I will send you to the extra channel. I will see you tomorrow with another part of Vertical Aerospace News. We will break down the Japanese and Singapore ventures. We will talk more again about the new acquisition, the new partnership, and on Saturday I'll definitely see you on the live eVTOL show. That's it. Tomorrow morning, Sensei, after Martyn, then I'll be there in between before the closing bell, and then the most important event of the week, the closing bell party, the music party with Martyn, and then obviously Saturday live eVTOL show. So you either, if you stay where you are, as soon as we end, it will take you to the extra channel. We'll take you to the extra channel. If you want to join Martyn on Discord for live Q&A, I'll be there as well. Click on the link, top of your chat. Top of the chat, it's pinned up there. So, I will see you on Discord, or I will see you tomorrow. That's it from me. Take care of yourselves and each other.